Hey everyone, John Henry here, slingshotfutures.com. Welcome to the Daily Futures Market Outlook for tomorrow's trading. Tomorrow being the 29th of the month. Overall, another day of a pretty slow morning session right after the 9:30 bell. Really from 8 to 9:30 or so has been kind of slow going into 10:30, 11. Not really a whole lot going on. Obviously, crude inventories today, there was a little bit going on there. But again, another day where we don't see a whole lot of movement until the markets kind of start waking up closer to, well, a little after noon. So not a big surprise coming into today, after two big back-to-back days, a huge up move, huge down move. Likely, we are going to see a situation where the markets kind of pause for a little while. And I think that's fair. Traders trying to kind of figure out what's going on. But for the most part, not a ton to work with, so it requires a lot of patience. Now remember, this is a holiday week as well. Friday is off, and a lot of markets are closed on Friday. So that is something you have to kind of pay attention to, in that tomorrow is kind of the last day of trade, and a lot of traders might not even show up tomorrow given the lack of volatility in the mornings. Might just choose to kind of sleep in a little bit. So before we jump into the charts, as always, swing it over to slingshotfutures.com, click on the Join the Daily Outlook newsletter, where you're able to register for our email newsletter list. You'll be notified every time one of these emails comes out, and every time one of these videos comes out. And along with that, in the email, it's going to cover a bunch of stuff that you might not, that we just don't have time to talk about in the video. And that's going to be everything from stocks, crypto, options, you name it. If it's moving, it'll show up in that Daily Outlook newsletter. Along with that, click on the Live Trade Room subscription and trial info so you can sign up for a free 3-day trial in the Live Trade Room with us. You can hang out with us for a couple days in the room, see how we approach the market, see how we analyze the markets, and just kind of, ask some questions, see how we trade, and just have some fun. So make sure to sign up for that if you haven't done so already. Now, looking at the charts, looking over on the euro, first off, like we always do, we have a pretty nice bearish continuation. Again, this is exactly what we were looking for, and it's working out nicely. I don't think we could have scripted this any better. Again, it's a copy-paste from the previous move, and we are having a downside breakout. Literally perfect. I don't think we could have nailed that peg any harder. That worked out really nicely. Now, support at 24,440 is out of the way. That really hasn't done a whole lot, and they have finally filled the gap down here. And support down here has also broken. Not really a whole lot of emphasis on that level. So we're looking for new resistance to come in on this next downturn. And the reason that we're looking at that area of resistance, even though it's kind of in the middle of nowhere, or at least visually, if we look backward, the same thing happened. We had a strong bear leg down, they consolidated and broke lower again, and that level became a big block of resistance going forward. I want to see the same thing happen over here. So that's going to be at around 24,855. It's not a solid line in the sand, but it is around that zone, if you will. Really good bearish continuation to the downside. Overall, I think the primary objective at this point in time is going to be to test these previous swing lows, and that's going to be at 23,645. And, depending on how they want to play it, do they want to trap those lows and turn right back up? We are kind of combining a couple things in the same area here. It wouldn't be a surprise to see the sellers who have been driving this market all the way down look to take some profit. And that 23,645 lines up a little bit above it right now, but with the rising wedge bottom, horizontal support, kind of pegging a pretty big area here. So definitely something that we want to keep our eyes on in terms of support. But going into the overnight session, because we haven't hit that level yet, I'm looking for continued selling pressure to drive the market down to actually get those tests of those levels so we can get that kind of out of the way. Over on gold. Now, gold has pulled back, and we were talking about a 50% pullback yesterday, and it just smashed through it. It kept going. Hasn't stopped yet. So we've blown through the 50%, blown through the 61.8. Everything is pretty much gone. So if we look at the price levels here, we can get rid of those. We do have a couple other ones, of course, on the list. Last line of defense for the buyers being the 786, and that's at 1323.1. Now, again, whenever we're talking about any levels, it doesn't matter if it's a fib level, it doesn't matter if it's, any, it doesn't matter. You like stacking multiple levels of confluence together so you have an argument for support, not just, oh, well, because the fib said so. Well, no, that's not good enough. So we have a level of support here, the 786. Okay, let's go backward a little bit and draw that line backward. Do you see anything that stands out a little bit here? We have a huge amount of support, support and resistance a little bit there. Support and resistance, and now we're breaking up, and guess what? Probably looking at support in this area. So we have a not just 786 area of support from the fib perspective, but we also have a structural area that also backs that level up. So that 1323.1 is looking pretty solid if we can get a dip down into that for gold going into the overnight session. I don't necessarily believe the sellers are done yet. It's hard to see this strong of a move down not be followed up with at least a retest, kind of like what we saw over here. Sometimes they only retest those highs, those little peaks, and reverse. Other times they go flying higher for a ABCD type move. In this type of situation, you know, the same thing with this big bear drop here. Little pause, continuation, kind of assuming that we're going to see about the same thing here. Want to see a little pause and another attempt at those lows. Now again, it might just be a quick little trap underneath those lows, might be a big drop lower. If it does drop a little bit further, we have that big area at 23.1 stacking up with that horizontal support. Definitely interested if it can continue lower, but going into the overnight session, I'm looking for the bears to continue this drive lower, maybe a slight kind of sideways to bullish sentiment going into tonight, just due to the fact that sellers are going to be taking some profit. On crude, we can get rid of these API report levels here. So on crude oil, we've blown through support at 64.55. Really didn't do a whole lot there. Inventories did come out, and kind of what we were talking about this morning in the trade room was that, you know, we see the API number forecasting a build of 5 million. That's very bearish. The crude oil report inventory-wise for today was forecasting almost nothing at like a negative 0.2. But when we looked at price action, well, first of all, that would allude you to believe that we're probably going to have a pretty bearish day. The market's probably going to be, you know, driving down. Everybody's assuming that it's going to be a bear market, so it pops up to a new high, it gets swatted right back down again. And we did see a little bit of that selling on the highs, but all of the sellers completely disappeared when it started pushing back down to the low. And that started giving us clues that, wait a minute, although the API is saying that it should be really bearish, price action is telling us otherwise. Something isn't quite right, and whether the market participants know it or not, it's being reflected in price, so that when the number actually does come out, I'm not anticipating that 5 million build because the market isn't proving that. Nothing is showing us that the market should be giving us a 5 million build, and in fact it came out a little over 1 million. So it came out with the market giving us all the clues we needed to tell us, hey, it's not going to be as bad as it really looks. Now it did still catch a big bear turn down, but not before it caught a big bull run higher before that drop. And I think a lot of that comes to the fact that it's not good. You know, having more than you need is definitely not a good thing in terms of trying to sell stuff. But at the same time, it wasn't as bad as it could have been. And I think that little bit of brief optimism we saw was used as an opportunity by sellers to slap the market right back down again. So very interesting paying attention to that market structure going into fundamental news like that. And it definitely played out a pretty important role in how the market responded. So far, we have a huge bear candle on the 4-hour. That's the inventory and the reaction and the response and back and forth, and just a giant, basically a doji. It kind of looks like a resistor, you know. You got the little resistor in the middle and the wires on the top and bottom. Kind of looks like that. Not really a whole lot of movement, and that is going to create an area of interest. The lows of the resistor is going to be in right there. We'll put that in purple. That's going to be at 63.72, and then we have the highs of the resistor. The resistance of the resistor at 65.13, and those are going to be the areas of interest. We've bracketed basically this huge zone that now the market's going to have to fight through, and the closer we get to the highs or the lows of that, we're right smack in the middle right now, those areas are going to be playing some key roles in how the market responds, and you'll very likely find some halfway decent opportunities off of that. Now we are coming back down to the other thing we were talking about, which is a spike up into a spike in channel. More of a spike in kind of wedge, I guess, in this case. But we have broken down and retested the lows of that, and they failed a close underneath it. That's a pretty big, important level as well. So we do have a little bit of bullishness behind the scenes, but we are anticipating a larger correction. We have a cycle off the top of the channel. The channel has been working really, really well. It would make a lot of sense to see that kind of continue its way down to the bottom of that channel. Now, keep in mind, it doesn't have to fall necessarily. It could go sideways for the next, you know, month and then find the bottom of the channel. But either way, the general kind of consensus is that we're going to go sideways to down to find that bottom of the wedge. And it just so happens that we have a lot of support underneath us as well to kind of aid that. And I think buyers are going to be buying into any downward move that we see on crude oil going into, well, about the next month or so. And then finally, over on the S&P. Now, the S&P has that open zone still of interest that we haven't even come close to retracing back. We're finding a huge amount of support. We finally got the test of those low closes in the level of support below us. We finally got that test at 25.95. Beautiful bounce off of that area. Of course, not to mention big round number of support at 2600. But we finally got the physical test. This is the test that we've been waiting for a very long time. Came close and then missed it. Came close and missed it and tried again and failed. And now we finally got that test of support. So support at 25.95 has held, and it is holding quite nicely so far. Mark that as a dash dot so we know that it's already been tested. But for the most part, huge level of support, and we're finding some profit taking. Go figure. Would have never guessed to see that happen. Right now, the market's mostly sideways, range-bound, not a whole lot going on. Big swings inside of that. Keep in mind, measuring from the top to the bottom of just this kind of movement that we're seeing here, that's almost 41 points. So it's by no means a small range that we're working with here. There's a lot of back and forth in the middle of the day, but for the most part, at the end of the day, we're not really doing a whole lot. We're just kind of stuck in the same range area, and this is where the market's going to have to make a decision. Is the market going to find a consolidation and a continuation breakout? Or are we going to find a consolidation and reversal? That's kind of the big thing that we need to ask ourselves right now when it comes to the overall market sentiment. Now, from a technical aspect, the way that I'm looking at this, so we have a big drive lower. The anticipation is that sellers are going to sell into that initial bounce, looking for a new low. They got it, and they bounced off of major support. We're also seeing the sellers trying to come in, absolutely no follow through at all. Really bad bear bars, no context to the downside. To me, this looks like we're probably going to see a little bit of a trap failure, and maybe even another trap failure. As long as it stays above these lows, we should be okay. Now, really, what does that mean? Well, we are still taking a lower probability approach. The higher probability is, of course, with the downside. The sellers have been pummeling the market. It makes more sense, in probability-wise at least, for the market to continue to push down to a new low. So the probability that I'm looking at is lower. But what that means is when you have a lower probability of success, if you were looking to buy in this case, you would be able to offset that probability with a larger reward. That's how it works. It's a give and take relationship. So buyers who are buying in down here are risking very, very little for a potential of a huge reward all the way back up to start filling this gap. You're talking 3, 4, 5 to 1 on the way up. So although it's lower probability, I think a lot more traders will appreciate the amount of reward that is potentially there for them to be taking that side of the trade. Now, that also does mean that there are going to be a lot of stops below this low. And for you sharks out there, you know exactly what that means. I'm definitely going to be hunting these waters around these lows, looking for some possible bounces. Because, well, when a lot of stops hit, if there is a buyer to absorb all of those, or several buyers, you tend to get a pretty nice bounce. So I'm going to be watching those lows regardless. But a lot of buyers, I think, will be trying to build into this, trying to get a little bit of a rally higher. We'll have to wait and see. That's going to do it for the price side of things. For the S&P, just to kind of summarize it at least. In the overnight session, mostly range-bound, looking to buy low, sell high, stay out of the middle, with an emphasis on buying low, so that we might be able to hang on to a long-term runner. We'll see. Looking at the news for tomorrow, the news calendar does have quite a bit of stuff going on, but you'll notice there's a distinct lack of U.S. flags here. There's no U.S. news tomorrow. Oh, no, right? Not only are we going into a Thursday with Friday being off, right? All of the markets are closed on Friday. Now Thursday doesn't have any news either. Oh man, tomorrow might be an absolute mess in terms of price action. But tomorrow morning out of Germany at 3:55, we have the unemployment change forecasted at negative 15,000. At 4:30 out of the UK, we have the GDP for quarter 4. That's both quarter over quarter and year over year. Forecasted 1.4% for the year over year and 0.4% for the quarter. And then out of Canada at 8:30, we have the GDP for January forecasted at 0.1%. No U.S. news tomorrow. So like we always say, you got to play it a little bit cautious when you're going into a long holiday weekend. And the day before that doesn't have any news at all. It could be a really kind of odd situation going into tomorrow's trading. So really what I'm looking at is buying low, trying to get in early rather, and maybe take off. The movement that we're getting right now, especially in the morning session being so lackluster, I would almost rather just kind of have an early in, early out kind of day, forget about it, take the Friday off and take a little bit of a break, getting some nice rest over the weekend, and come back Monday all refreshed and ready to rock and roll. We'll have to wait and see. But like we always say, it doesn't matter what market you're trading, always make a plan. Trade the plan, follow those rules, and you do just fine. As always, with a long holiday weekend, enjoy the holiday weekend, spend some time with the family, all that fun stuff. Make sure to rest up, get away from the markets a little bit. I know it's addictive. Tap into the vein. I understand. I am fully addicted as well. But it's good to take a little bit of a step back, take some rest, and come back on Monday refreshed. So we'll see you all tomorrow for the trading day, and see you on Monday after the long holiday weekend.